Welcome. You're watching Beyond Markets. Thank you so much for joining us today. I'm Esther Awuni. On today's show, we'll discuss the future of trade in Africa. And as always, you can join the conversation with the hashtag Beyond Market, and you can follow my Twitter handle too at Esther O. Awuni. Now, with one pending ratification left after Ethiopia announced its ratification of the Africa Continental Free Trade Agreement, the pact needs 22 countries to ratify to kick off the agreement. Vinod Madhavan, head of trade at Standard Bank Group, joins me to discuss the future of trade in Africa. Vinod, thank you for taking the time out to join us today.
Thanks, Esther. Thanks for having me.
Now, this wave of protectionism that we continue to see across the globe appears to be redefining trade as we know it. And of course, as you know, there's the Brexit, that we're seeing. There's China and the US still trying to come to a win-win agreement over how they want the future of trade between both countries to be. But on the other hand, we also have Africa also trying to better integrate and just foster more trade or better trade on the continent. But let me just ask you this, as far as these new trade agreements that we're seeing across the globe is concerned, how can Africa, how can the continent take advantage of Brexit, for instance? How can we renegotiate, as it were, and just use this Brexit to leverage better trade terms for the continent?
So Esther, at its most simplest form, we need to be open for opportunities. It is true, US and China are going through rediscovering and redrafting how to do trade with each other. I'm very confident that they will do that. But what it gives us is an opportunity to engage both of them, and especially China, to be able to do more trade. And we can see that happening already. China had the inaugural Chinese International Import Expo in November last year. And this year in June, there is a dedicated China-Africa Expo for investment and trade that's happening in Hunan. These are opportunities that we have to seize with both our arms and actually be there in those markets. So the Africa-China trade corridor is one key theme that we have to leverage. The second theme would be intra-Africa trade, which the most optimistic estimate is it is 16 or 17%. In other words, our markets and we do almost 83 to 85% of our trade outside the continent than within the continent. And this is that other macro theme about Africa interconnectedness. It is happening on multiple levels, and a key element is trade and commerce, which is where the African Continental Free Trade Agreement is focusing on. I personally am very confident and optimistic about the ratifications by the various nations as far as this agreement is concerned. And once we go live, in addition to a number of various aspects, there are aspects around making sure that we will reduce our tariffs between doing trades amongst each other. That, coupled with the infrastructure and the investment in infrastructure that is happening, I can only expect that we will see more intra-Africa trade.
We're going to talk extensively about the Africa Continental Free Trade Agreement, but I just wanted to bring us some points you made, especially trade between China and Africa. Now, Africa has been, China has been Africa's biggest trading partner since 2008. But you see, some of the key elements of trade has to be that it's beneficial to both parties and it's balanced. But if we look at the history of trade between China and Africa so far, especially some individual African countries, it hasn't been balanced. If you talk about countries like Uganda, even Nigeria, just looking at the ratio of imports to exports between China and some African countries, it's not balanced. It's always been in favor of China. Do you think that that is something that should be addressed? Do you think that that is something African countries are looking to change going forward?
So Esther, I think that sentiment, which is the sentiment about China being seen more as an exporter, more as a manufacturing hub, is at the core of the concern that is currently playing out as far as US and China is concerned. In my opinion, in our opinion, China has realized that this is something that needs to be corrected. And it is not just about perceptions, it's about actual investments, which is why China had their inaugural Chinese International Import Expo in Shanghai last November. And what they did is they opened their kind of floors to say, all around the world, please come to Shanghai, and all that the Chinese government, SOEs, private enterprise and retail would do in that expo is buy, is basically import from around the world. The Chinese president has specifically kind of targeted that over the next 5 years, that China will look to import up to $10 trillion. So effectively, the Chinese have opened the doors, and now it is for us to actually leverage that opportunity, to seize the opportunity, to be there, to actually be able to export not just agri and agri products, which is what people usually talk about, but including tourism, including other manufactured goods. So in my opinion, you are right. However, the Chinese understand that, and they are trying to make the corrective actions, and we need to seize the opportunity.
Well, speaking about these opportunities, what opportunities come for you that you, come to mind for you that you have identified that Africa can begin to take advantage of?
So there are a few. The way I would think of this, Esther, is a geographic lens. There are certain markets which naturally lend itself for exporting goods and services to China. It's the usual suspects of Nigeria, Ethiopia, Kenya, Uganda, South Africa, Zambia. I mean, I could keep going on, right? I mean, it's the usual, shall I say, our top 10 economies. A lot of the West African kind of nations look at exporting into Europe, which is still required. I have always said, rather than looking at redirecting exports from one corridor into another corridor, the idea, what we need to focus on is actually augmenting, doing more and adding on the corridors. So that's one theme in terms of geographies. The second dimension, the second theme that I would think of is sectors. And the sectors are, so we have the commodity sectors, and I'm not saying that kind of we should do more of that. I think we have done a lot of that. We need to move away from commodities into not necessarily finished good, but goods and input into further manufacturing. We need to focus on tourism. We need to focus on agri products, and not just kind of input products, but processed products and finished products. So these were some of the kind of quick thoughts that come to mind. My belief is that whenever a nation, whenever a corporate have looked to do business with a counterpart in China, as an example, and it applies also for a counterpart in Europe, a counterpart in South Asia, or a counterpart in LATAM, which is the more broader South-South trade, it is the same questions. The questions is, how do I manage my credit risk on the counterparty? How do I manage my currency risk? How do I manage my operational efficiency risk? And I think that's a region, a space where the banking industry has, we need to step up. The banking industry needs to step up and work with our corporates in addressing these risks, which allow the corporate to grow, but grow in a risk-prudent manner.
Okay, Vinod, talking about exports, you made some very good points there. But you see, there are also concerns around Africa's, or the ability of some African countries to add value to some of their exports. Value addition has been a conversation, especially I know that the African Development Bank has been pushing for that for Africa, many of these African countries, to just stop exporting commodities alone, but adding value to those exports that they take out there to other regions. But what are your thoughts in terms of the progress we've made as a continent in value addition to our exports?
In our opinion, and frankly in my opinion, I think it's a case of glass half full when you talk about the progress. I feel that we have made good progress, certainly some of our countries, and there is some nations that can do more. It is a clear area of focus for a lot of our governments. It is a clear area of opportunity for the private enterprise, and hence the banking industry is looking towards supporting that. The way to think of this is local beneficiation, which is all around how do I add value to what I already have. So let's say we're talking in the space of agri. do we actually send the agri product as soon as it is realized? Do we package it and send it, or do we process, add value and then send it? And to my mind, we need to actually cater to all the three aspects. What's also very apparent is that the private enterprise, the global private enterprise, is aware of this. In fact, they see this as an opportunity. So we are aware of our customers coming into our markets and putting in plant and machinery to do the local beneficiation, and then send the finished product into the wider market. And hence my view of a glass half full. We should feel, I would actually say we should feel good about the progress made so far, but we have clearly more to do. And this is something that the public, which is the governments, has a role to do. There is a role that the regulators have to do, and there is a role that the private enterprise has to do. So it's something that all the three aspects of economy, of commerce, need to come together and kind of focus on.
Now, Vinod, let's quickly move now into the Africa Free Trade Continental area. The agreement is expected to boost intra-African trade by 52% by the year 2022. We're just waiting for one last ratification. Now, there's been a lot of talk about this, especially, the kind of investments that will need to be made by individual African countries. There's also simultaneously conversations about some African countries, the smaller ones, with smaller manufacturing hubs, and the potential that they may be, or the fear that they may lose out on bigger markets, on the bigger markets landscape, as it were. But what are your thoughts in terms of how this agreement has been put together and how we proceed from here when we do have everything in place?
I am particularly excited by the fact that the traction I see in pulling this together. And I think we also need to feel proud about this. The world is actually kind of trying to move away, and kind of what's happening, be it in Brexit, what's happening between US and China, are all indications of how the world seems to be moving away from multilateralism, whereas we in Africa have kind of gone so strongly towards one agreement, or one, shall I say, trading bloc that includes multiple trading blocs that used to exist in the past. We had SADC, East African Community, WAMI, and now we have an African Continental Free Trade Agreement. So that's my first observation. And I'm hoping that that actually drives the nations to ratify the agreement soon and then leverage the opportunity. Now, what's the opportunity? Simplistically put, the demand for products from us, especially locally beneficiated products, between our markets, between our countries, should be higher than the demand if you have to cross a sea. For the simple reason that there is much, let's say we're talking about textiles, the ability to respond to changes in fashion demand is much quicker if you are closer to the market, to the demand opportunity. In my opinion, what was happening in the past was the lack of a shall I say, continent framework meant that we could not have enough trade. It was almost easier to do more trade with outside, with the Middle East, with Dubai, or with kind of Europe, than amongst ourselves. The third thing that I put on the table is that, yes, you're right. You're right that there are these competing, seemingly competing objectives. So, for example, what you mentioned, that a small nation has a manufacturing business or a market, and there is this concern that once you open the borders, the domestic manufacturing business may not have the support. And at the core, what is it? It's all about employment.
All right, Vinod, we're going to take a short break here. Well, thank you for your time so far. If you're just joining us, Vinod Madhavan, Head of Trade at Standard Bank Group, is with me today, and we're discussing the future of trade in Africa. Now, Vinod, let's pick up from where we left off. Now, there's been a lot of talk about of course, exports from the African continent going out to other regions. But there's also been this conversation that's been gaining more momentum, and that's the future of production on the African continent, talking about manufacturing in the context of the fourth industrial revolution. Now, we've seen how technology has been disrupting the manufacturing space and making some countries, especially developed countries, more competitive in the manufacturing landscape. We're talking about artificial intelligence, robotics, additive manufacturing, many of which many countries here in Africa are not even applying at the moment. So if we're talking about being competitive on the global trade front, where does that leave Africa? I mean, is this a conversation do we need to begin to put action into words as soon as possible?
I think, Esther, you are spot on. This is certainly a very interesting and important topic. My quick thoughts on this, and we could spend a lot of time, but if I have to kind of, shall I say, ask for some quick thoughts, one, additive manufacturing is actually beneficial for us in our markets because it removes the need. It removes the need to have a strong infrastructure in terms of roads, railways, and so on. If you want to kind of print out a shoe, you get an algorithm, you get a file, you go to your friendly neighborhood 3D printer shop, and you will print out your shoe. So this is the future, right? So in my opinion, this actually enables our markets and us to realize more revenue quickly. AI and other technologies such as blockchain. So if I gave you the example of how we at Standard Bank are looking to kind of leverage those technologies, they actually allow us to augment the people that we have. The people that we have to have are trained. They know how to go about doing trade. In our opinion, technologies such as artificial intelligence, machine learning, distributed kind of ledger, blockchain, all of these disruptive technologies will only help to augment this. The beauty about these technologies are these are actually in the software technology space, and again, you don't need infrastructure. So a lot of the things that is actually hampering us now become irrelevant. So frankly, that's very exciting.
But what do you think about Africa's industrialization strategy? I know that different blocs all have their industrialization strategies. There's one from the AU, there's one for ECOWAS itself. But if you just look across the continent and looking across these industrialization strategies and how they fit into our current realities, and by that I mean how fast technology is moving these days, would you say that we're at an advantage, or do you think we need to go back to the drawing table and just tweak one or two things?
My kind of view would be that I think we would have to revisit the industrialization policies purely because of the fast pace of change in these disruptive technologies. In fact, it should be reviewed, in my opinion, once in 2 years at the very least, if not sooner. I still believe that the factors of production that were actually the handicaps for us in the past, now and certainly in the near future, near to medium term future, are going to become irrelevant. And in that sense, it's actually advantageous for us. But what we have to realize is that the same thing applies for emerging markets right around the world. And hence, in a very strange way, if we, and when I say we, I'm talking about both the public and the private enterprise, if we don't come together and move and seize this opportunity with haste, actually it could be risky.
Now let me ask you this. Now, if this, hypothetically speaking, we go ahead with the last, the last element of the African Continental Free Trade Area, we have everything in the bag. How do you see, how do you see this shaping the African continental trade in Africa? Let's say for the first 10 years, 1, 2, and how do you see the rest of the world, especially key trading partners like the EU, the UK, I mean, if they sort out Brexit by that time, and the US, how they're going to be relating with Africa, because according to this, the African Continental Free Trade Area document, this is going to be the biggest free trade zone, since the WTO.
So yeah, 44 nations is a big trading bloc. So the two questions you had, one, we very strongly believe that as the ratification and the adoption keeps growing, we will see increased trade within our markets. And why so? As I mentioned, kind of the African Development Bank research shows that the number is around 17% of our trade is actually intra-Africa. Let's say we double that because of one, the softer aspects of the Continental Free Trade Agreement, two, increased interconnectedness that makes it easy for business to travel within our nations, and three, increased interconnectivity in terms of infrastructure. Let's say we double that and it is at 32, 33, 35%. It still is much lower than where the other intra-regional trade stands at. Asia stands at now at 55%. The Americas is at 60%. Europe is at 60%. So frankly, the headroom for growth is there. Okay. The second question you asked is how does it align with trade with outside Africa, trade with EU, trade with UK, trade with China? My take is that since we are talking about growth, even though the intra-Africa trade will grow, let's say to 35%, will double, right? It will not be at the expense of trade with other corridors. The growth rate in other corridors might be low, driven by other macro factors such as demand factors. However, this is not about substituting, this is not about instead of. In my opinion, it's as well as.
But do you have concerns that, because if this is going to work, I'm talking about the Africa Continental Free Trade Area now, as I mentioned earlier, African countries are going to have to make significant investments in improving infrastructure and connectivity across member states. Are you concerned that some African countries, that this may be a big problem and a big barrier for some African countries to do?
I think it would be kind of wrong on my part to say that that won't be the case. You are right. A number of nations will have priorities and they will need to kind of prioritize, and maybe increasing, shall I say, bandwidth doesn't make the cut. In my opinion, it will be the combination of the 44 that will move in the right direction, and we will have the spectrum. We will have nations there who will seize the opportunity with both their arms, and then there will be nations there who would be on a little bit of a wait and watch, especially as this evolves. That said, once the benefits of increased trade, and in my mind increased trade meaning addressing the question of employment, when that becomes visible, I feel that we will have momentum, both political and social momentum, behind actually embracing this faster and doing more. So I'm actually very optimistic about this.
Well, I know you're optimistic. Let me just ask you one final question. When it comes to Africa, sometimes when it comes to policy making, not just even policies, Africa, when it comes to policy, has never had a dearth of policy. It's always been implementation. It's always been the political will to go ahead and do these things. Are you confident? Are you optimistic that Africa does have the political will? African leaders do have the political will to go forward and see this agreement through, make the necessary investments, and of course, strengthen the value chains, and of course, create those much needed jobs, particularly for the continent's teeming youth?
Yes, you're right. We have enough instances in the past where intent has not necessarily been followed by action. And this time, and maybe it's because of what I work with, trade is something that kind of me and the banking industry more broadly are very involved in. I am very optimistic. And maybe kind of one thought to put on the table, I think that the political will this time will also have that social will support. That said, it is not easy. This will require education. This will require tenacity. And this will require all of us to use the political process to actually ask for these outcomes. It is doable. It has happened in the past in smaller kind of parts within Africa as well as outside Africa. So it is not impossible, it is not easy, but we have to do it.
Vinod, thank you for talking to us today. We really do appreciate your time on the show. I've been speaking to Vinod Madhavan. He's the head of trade at Standard Bank Group, and we have been speaking on the future of trade in Africa. Well, that's it on Beyond Markets. Thank you so much for being a part of it. Remember, you can watch the show at 5 p.m. West African time every day and have access to all previous episodes of Beyond Markets on our website. That's cnbcafrica.com and also on YouTube. Do stay engaged with the hashtag Beyond Markets, and we'd love to hear your input on our discussions. You can also follow me on @Esther O. Awoni. From myself and the team, it's bye for now.